Stupid. Mic check and screen share check, please. Okay, let's get started. It's the Nightly Strategy Podcast for April 6, 2022. Let's see what we got here. All right, so we had a gap down from yesterday, gapped right down to the PSAR and below. Sold off, reversed to close in the middle of the daily range, but it's now well below the skin of the dragon. It made a new 10-day low today. It's a fraction away from the Bollinger Band mean. The 3-period hull is down sharply. The RL10 extension is down. It's still in the summer, but we're sloping down. The RL30 extension is still up, but you can see, I'm sorry, that was the PSAR is still up. The RL30 has gone flat. So when you combine a flat dragon and a flat 30 and it is rolled over, and there's a P1 today, then any breakdown below this price level at the 10-day low, which is also the low of the day, what would we call that pattern if it continues to fail through this line? What would we call that? So in other words, if it opens here where it closed yesterday and then failed through here, what would we call the violation of that line? That would be the owl, because we have a strong move up. We have a P1, which is the RL10 crossing the RL30 outside of the boundary of the river. We have an RLXD here. So that's criteria 1, criteria 2, criteria 3. Now, the only two things that we have to make this an owl would be the dragon rolls over, which it will do tomorrow as soon as that thing breaks down. If it breaks below there, that will be enough to trigger the dragon to roll over. And the RL30 only needs one more day of selling for it to roll over. So that makes this violation of the 10-day low an owl pattern. So we don't get the CD until down here. Oops, down here or here. And that's because of the size of that size of the move was so enormous that there was no intermediate, RL10 or dragon belly to break through. What you need is a defined low like those two to create collapsing dragons. But that would be an owl entry tomorrow. And a breakdown of the new 10-day low. And then if it crosses the Bollinger Band mean, we got a downward bias too. And there's plenty of room to the downside. So that's where we are. To the upside, here's what would we call a breakout above the peak of that dragon right there. So if we put that line right there, and if this reversed to the upside, what would we call that? Or this or RL10 breakout? Emerging dragons, yes. And would probably call that you might call if it, if it came right here and reversed up, we'd probably call a breakout above the dragon. We'd probably also call that a kata 2. We would say there's a low, and then this would be forming a low. If this reversed up, this would form a low. And so we'd probably call that a kata 2 with an emerging dragon, I suppose. I like that it was a gap down, but ended in a doji. So there was some fight left in the bulls to bring it back to price level around 446.5. The PSAR doesn't flip yet because the RL10, which is here, hasn't penetrated yet. So the using the PSAR on the RL10 is what gives you some of this stability. And now that acts as a rising support level, waiting for the RL10 to penetrate. Right. Well, I guess it's right there. That's where the RL10 is. All right, next up, the S sectors. So the S&P was down 1% today. Treasuries were a little better, only down minus 0.8, and Dow was the best at down minus 0.43. Emerging markets off 1.3, Russell off 1.36, and tech off 2.17. All right, so let's take a look at the downside. What are the underperforming sectors? The VIX off 1%, materials and lumber 1.16. Brazil, the other lumber off 1.7, commercial real estate 2.1%. ARC Genomics, oil and tech off 2.3 to 2.37. Consumer discretionary 2.6. Lithium, marijuana, the FANGs off 3.5. Moonshots blockchain off 3.9. Clean energy 4.5. ARC innovation 4.6. Global future of finance 4.8. Bitcoin 5.2. Blended large cap crypto 5.6. Blocked and Ethereum 8 and 9% respectively. Coinbase was off 5.8. Squarespace 5.25. Rivian, Cliff, PayPal, Tesla off another 4% to, it's still above 1,000, but that's come back quite a bit. So off 4%. Robinhood 4%. Microsoft 3.7. US Steel 2.6. Apple 1.8. So lots of pain and suffering today. Very little on the upside, so we should pay attention to that. Finance and blended commodities were only down 0.6 and 0.7. Oil exploration off 0.1. Agriculture off 0.05. Very few things above the line today. And that included S&P Bio, Energy, the defensive plays of consumer staples, and then wheat and precious 1.26. Alcoa was the lone survivor of stocks at 0.01. Devon Energy only off 0.2. Mexico, I should have added. Mexico's off 0.98. So not a lot to choose from there. Energy and defensive plays and agriculture, it looks like about it. So I talked, I think yesterday about Glenn Osborne's critical state framing. And yesterday he framed treasuries for us. Thank you, Glenn. And here's Glenn trading the treasuries today. Right off of his frame. Using a standard MMRB of 25 cents. Big gap down. This has a almost Kata 2 feel to it. You could see that as the oversold first leg pulls back. There's an uptick. So I'm not offended by taking that second one, especially when you combine it with this price action. Enter. 1, 2, 3 exit. 2.4R. Kata 2. Front runs it a little bit. Didn't wait for this. Took it here. I like that. I like the exit. Minus 0.3. PSAR flip. Standard risk. Standard exit. 1, 2, 3. 1.7. I would probably call that an SSC because I don't think that low is that much higher than this one. So I think I just called that an SSC. Scratch. It failed to fail. It did not fail. So it gets the PSAR flip, standard risk. Nice exit. Kata 2 reentry. For 1.1, 1.4, 1.7, and 2.4. His non-performing things were minus 0.3 and a scratch. 6.3R. Notice how good that entry is. Almost like a Kata 2 flavor right there. Nice shooting, Tex. Here's Tim. Starts trading here. I like that. Has a Kata 2 feel or emerging dragon. Makes a scratch. Takes the PSAR flip and roll over through the VWAP. 1.8. Re-entry. Scratch. Stop and reverse on the PSAR flip. Scratch. Not waiting for it. That's good. These are not failures. They are just free lottery tickets that didn't pay. There's a world of difference. That's front running a 1, 2, 3. Reasonable shot. Did not pay. Or did I miss one? Oh, I'm sorry. Here. That one paid 0.7. This one scratched. There was no follow through in lower wick, so that's why he scratched. Gets the re-entry, gets paid, tries the flip, scratches immediately. Stop and reverse, stop and reverse. These are micros. Oh boy. How to handle the high volatility during US opening and the futures contracts. There's a 1-2-3 entry or a 1-2-3-4. You've got a pinched PSAR. So I wait for a Z2. You get paid in a big way there. This was late to get out. This long that did not manifest. I think you should be out here, not here. Then I'd be willing to take that long instead of this one, but that paid okay. So I think you're in pretty good shape there. So 0.5, I think with a little bit of tightening up here, this might have been a 2R day. He had some questions and comments, so we're going to look at that. One of the things I asked him to do is take a look at this thing from a great big distance. On a day that gapped down and was selling off, we should get more on exploiting out on the downside. So trust the PSAR for the grinding trends. And by that, I mean, when we're making a new 10-day low and it's failing below yesterday's low, then the only thing on our mind here should be downside. Look how good that PSAR move was in here. And we were slow to that got in. Slow to get in, and quick to get out. So just trust that PSAR all the way down. This was yesterday's low right there. So all of this price action below here, it stayed below the low of the day the whole way. Make a new 10-day lows. And when that rolls over like that, that's where the juice is. So we should have gotten more out of that by trusting the PSAR. He made some comments. He's learning to see. There's a point about the MACD he makes that I want to address. And he says, I confuse the stable sideways looking MACD with fading momentum. And by that, he means this section in here, it's the MACD is just flat. So that is, he thinks that's fading momentum to the downside. It's not. What that is saying is that there is a constant downward winter move all the way through here. That's what that grinding downward move is. It's not losing momentum until you see it actually having a slope. And the significant moves are what happens at the zero line. Like right here is where it went below the zero line and it stayed there until it briefly flirted here and then immediately jumped under. It didn't get out of below the zero line until all the way back here. So that entire move should have a downward bias. And then I asked him to take a look at yesterday's low and the 10-day low, so that if you have something like yesterday's bar may have been like this, maybe a closed bar. So when you have a line underneath that also happened to be the 10-day low. So when this thing gaps down and goes below all that, that thing is heading down, that it broke the support level. By the same token, if it had not gapped and just opened here and then started monkeying around, when it breaks yesterday's low, you can expect that first move to be sharp. So that's why I like having that as the trigger, and why I'm not offended if you front run that a little bit in case that does fail, so that while it's failing big, you're not trying to chase it to get in short. You're moving your stop from here to no lose plus dinner for 2. So be mindful of where those 1 day and 10-day lows are. And this one is the one where I made the point about the long sideways move of MACD below the zero line is not a fading of the trend. It's reinforcing that the trend is firmly in place. And that really pay attention to the crossing of the zero line as significant changes in trend direction. You can overread, you can try to over finesse that. Don't do that. Now we'll look at the daily report. Still sideways normal. Weakness on the 2 and 10-day. The risk Z is still suggesting the possibility of upside, but it has now clearly rolled over beyond Z2. So that is signaling potential change of trend and a move back down into here to the zero line. Handful of dojis, plenty of auto framers now that we are a distance from the 10-day low or 10-day high, excuse me. Goldman and Home Depot look very interesting to me. JP Morgan at 6.5 to 1. Lots of ETFs triggering on the auto framer. And as you can see, many goodies on the auto framer now. So we'd be looking at this framing data for mechanical trade frames on all of these symbols, which test out better than 2 to 1. With the recommended risk in that column. I really like the finance sector right now. That has some good feel to it. Home Depot always on our list now. Here's Home Depot, about $1.10 for its suggested MMRB. You could do even less. I think my brother was at 50 cents the other day. But lots of range compression candidates to choose from. Alcoa is always going to get my attention. Being dominated now by fall on both the Dow and the ETFs. Coke, Johnson & Johnson, Walmart have most of the strength. Procter and McDonald's are not far behind. Not surprising that healthcare and real estate would be excellent defensive plays right now, along with staples. Everything else you can see is just getting smoked. Only the defensive plays had any kind of play today. Coming in on the RL30 slope rolling over, getting ready to cross its 10-period moving average after quite an extraordinary move up. So this would not be surprising at all. And then you can notice how far that fails in 2 legs the last time it failed. That was this move from here to there was the 13% sell-off, the correction last month. So the vulnerability is still there. Healthcare and consumer staples, the defensive plays. Looking at the 5-day performance, those are the only stores of value. Let's take a look at the traders. Let me come back to the frames. The Kata 2 slug, thanks to the team for finding that little guy. Griff doing the nation a service here. Here's the sum of the 3 patterns from yesterday, returning 3.5. Paid, good scratch, good stop and reverse, getting paid. Look at that nice turning point that he's got there. This should have been, I think, one of these instead of this. Is that, check and see if you missed that. That might be a Kata 2 to the downside. Good work. A little slow to get in, but great exit. Good try. Got paid. Good try. Got paid a little bit. So 3.5. Pretty good work. You should be feeling pretty natural on this stuff now. Now, Griff, what I'd like to see you do is make a workbook, a picture book. With the consolidated trades in date sequence, for, that continuous period of time. Then I'd like to see you do the histogram first for the trades. And then I'd just like to see the sum of scores per day, as if you were treating each day for all 3 patterns as a single black box trade. So like a daily system that applied those patterns that generated a single R multiple for the day. And then I want to see what our histogram looks like that for SQN for the meta system. All right. Yeah, the replays are fine. I mean, those are fair. What we're trying to do is get a accurate representation of the systems that are being generally properly applied over that period of time. What I want you to do then is just take the buy and hold of the S&P and compare that to the standard histogram and performance, so that we can see the difference between these strategies and then if you take like the daily performance, take the daily percentage performance day over day of the S&P, and what we're going to do is compare that to the daily production of the meta system. So like today would have been down, what, 1% in the S&P, and today was, or yesterday, and today was 3.5 or something like that. So this is the itemized trade. This is the daily net. So we can see something like, hey, what's an average day at work look like? As opposed to getting too granular with the trades. Seeing both of those would be helpful. Yeah. Here's Luke back on back on the horse today. Coming out of the Z3 pinch. That should be a red dot for an exit. Only gave back a little piece. That's good work. Don't be out. Man. I mean, that would have been 2 and 2 with your normal practice. And then this one, that caught a 2. Might have been another 1. This one gave back a lot. It gave back 2/3. This one gave back way too much. That gave back 3/4. That's a pretty good stop and reverse. Yeah, I think probably there. Oh, man, you were very reluctant to take your wins. That's another gave back 3/4 of the open profit. Much stricter and much better. So that 3.5 should have been 7 to 8, not counting the 5 that was available in here. So don't be out, be in. We already saw Glenn's and Tim. Here's Les. Nice day at 1.8. Gets paid. I'd like to see a re-entry there, maybe. This was a little slow getting in, so that if we get in here, then that's a good scratch instead of minus 0.5. A little slow getting in, which would have made this a scratch instead of a minus 0.2. A reasonable entry, pretty good exit for 0.5. So we're 1.8. We might have been able to save or add another 0.7 to that, which is about 30% increased in efficiency, going from 1.8 to 2.5. So got just a little bit of work to do there. Still in pretty good shape. WMB3 studies. All right, so there's our oversold. There's our first uptick. So we can buy that. Good scratch. Good scratch, or by 0.2. And oversold. First uptick. Good entry, good exit. Not sticking around. Next one. Good entry, not sticking around. Got paid. Good scratch. Didn't stick around. You know, there's a collapsing dragon in here and in here that you can't miss on the other charts. Got paid. Excellent decision. He's using the obvious downward trend, which you can get from the other market vision that we talked about with Tim already. That's worth a shot. And this one, of course, your collapsing dragon should be all over that. And that one does a nice job getting paid. So brought home the bacon, up an R on a day when the market got smashed after a gap down. So that's pretty good shooting. We're going to take a look at some trade frames first from Luis. Thank you for the support, Luis. What I'd like you to do is the price bars that you, or the price indicators that you have here. Let's get that on these as well. So that you can actually see what your trigger points are. And then I want you to build those trade frames as they make sense here, with a target and a target off the PSAR and then off the belly of the RL10. Both of those become targets for breakdowns. And then we need to see what that, this would clearly be a violation of that low. I'm not sure what that indicator is. When you get, is that the RL90? That has the 90 field. That should be green. So orange, green, the RL30 should be black, and then blue for the RL10. Okay, so 10, 30, 90, 270. Let's make that purple, green, black, blue. If you're not using the color-coded version of TC2000, let's standardize those colors, please? Although here you're using it. Maybe that is green the whole way up, and that's probably what it is. Sorry. I don't mind that wrist box, because now you're going to get an emerging dragon and a breakout to the upside. So that feels pretty good. And has no resistance overhead. This is one of those where you want to see those markups on your chart, so you know that if it breaks out above this thing, if it makes that move, you really got to be long by that time. You're looking at a 60-minute chart here. And so this may actually allow for, like, if it opened here and started to move up, you might be able to get into that early and add a second position on the breakout, because then this thing should really go. I like the short here on the PSAR flip. You're looking for this target. Get in the habit of drawing your targets, your moves to reasonable price levels, anchored by the turning points of the PSAR flips. That becomes the magnet that draws price down. And that way you can start to determine if that risk is justified for a downside trade. Only if you're targeting for here do you get the required 2 to 1. This is only about 1.5 to 1. And that's because I think that might be a little too wide. Like, if this failed immediately, I think I'd have my stop here so that I could use that as a risk box. So I could get 1, 2, 3, 4, 5, 6 down to that target. That's how you can scale. But nice work there. We're going to take a look at Glenn's frames, his fractal trade frames here. Notice how he's got the frames expressed on all of the charts, so you can see what the tactical frame looks like inside the larger context. That's very good practice. So this box is that box, is this box. And now you can see, where that buy and sell, the buy and go, or the sell and fail, why that's so powerful. Glenn, I'd like to see you get in the habit of drawing where you think those resistance lines are, like the middle of the dragon or the bottom of the RL10, Bollinger Band mean, so that you get the sense of the price ladder going up, so you can decide where you want to start putting multiple positions on. That will help you start managing the tactical trade using guidance from the higher time frames. Like, I would want to see it get through that resistance level at 72. So I would only trade one position to here. If this got through that, I think that's where I'd be adding the second position. At 72, which is all the way up here. So this would be forming like a V bottom. So you're long here. Second position there. Okay, Wynn Properties. This is the Las Vegas casino, guys. This thing really acts like a manic depressive, and it's just been grinding and murdering the traders. Except this gave us one good leg up and pulled down. Now, if it can hold here and take this out and go north and then get through 82 for a second position, then this could get to this consolidation zone at 86. But obviously, if that fails, this thing could get all the way down to here in a hurry. So that makes this a nice critical state. I think I would probably get short here instead of waiting for that, though. Now, if this opened here, like it shows, it started to fail, I think I want to be short there. But I could see why you wait for that. I don't mind the confirmation, because you'll get such a nice payoff that you'll be all right. So that's a nice one. And then the upside's easy to see. Here's the first resistance. So this breakout earns plus $2 on. See, I think I think I only want a $1 risk. If this breaks out, I think I'm only a $1 risk. So I can make this 2-to-1 pay. Bitcoin futures, really micro compression here. Come on. Yeah, real tiny compression. So the breakout either direction, obviously, again, this has been quite a sell-off from 30 to 27. That's minus 10%. That's kind of normal. So a rebound or a continued collapse, either of those are equally likely. So this move to here is easy to see, and the same move to the downside. That's a good frame. Penn Gaming. Fix my pen here. Two big downward slides here. One, two, and now narrowing into this tiny little wrist box. That's a nice breakout to here. Hitting all the way to 43 it wants to get to. So that's a nice box. And everything to the downside is easy to see, because that's a complete collapse. That's the one you actually want. Let's see. This next one here. Zyme Networks or Zymeworks Healthcare. Why is this so short? Boy, that's just nice. Two clean downward legs, a micro bounce, collapsing dragon, big downward move. Wow. From 35 to 5. Wow. But failure to fail further. And you got a low and a higher low, and there's your Kata 2 breakout. Because why not? SSC, Kata 2, Kata 2. That's how you stack these things up fractally. Stay with that one. Altria Group. Nice tight wrist box here. Break up, break down. Break up, roll over, and come to 52. 1, 2, 3, 4 to 52. Talking about a 30-cent risk. Kata 2, Kata 2, Kata 2, Kata 2. So the upside move is still there, but the downside move is easy to see. But again, if it breaks above this, there's no resistance over here whatsoever, and up it's going to go. That's an ideal situation there. And that's all for our frames. I think, or was this one? I think we did Dow, but just in case we didn't. Nice tight box. It's well within the standard trade range on the weekly. Perfectly postured in the middle. It's at the bottom end of the consolidation range, plus a leg down. So it wants to get back to 64 if it can break out from here. And that's the move that it's going to retrace. If it breaks out from here, it should zoom right back up. So really nice work there, fellas. All right, that's everything I got for you tonight. I had 3 hours of practice today, so I'm smoked. Hey, Bill, I may put you in the that Home 2 Suites downtown here in Leavenworth. They got a nice easy shuttle to the airport back and forth,
Okay.
and the great breakfast and a super internet. And
Okay.
the girls are in the middle of moving their rooms down to the apartments, so the house is freaking
No
disaster
worries,
right
man.
now.
There wasn't,
So but well, I
I
sent
didn't-
Linda your times, so we'll figure it out.
you
We'll
think
be
I'll need
ready
to get a car or no?
It's easier to Uber it, to be honest. They do a nice job, and then these guys can take you back or Linda will take her. I'll take you.
Okay.
We'll sort that out when we get here.
That's all I needed to know. I got no problem getting a room. No problem.
Yeah, I'll have Linda set that up for you. She's got your dates. She knows the lady down there will get the tortoise rate.
Okay. I was gonna, I was tempted to send you the She sent me are you recording still?
I don't know, probably. Yeah.